Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for a weekly update with our friends at Strategas. Today, I'm thrilled to be joined by managing director and technical strategist Todd Sohn to talk all things markets. But first, Todd, how are you doing today?
Ross, I'm great. It's always a pleasure to speak with you.
Yeah, great to talk to you as well. Always a lot of interesting nuggets and insight talking to you. So, I want to start with the breadth of the market, the idea of whether it's just a few stocks and a narrow rally or whether the market is broadening out. And I'll just turn it over to you and get your take on it and any things you're watching to kind of confirm your view.
Yeah, so I think we all are aware of the concentration risk that has gone on in the US market, right? You have five stocks at about 25% of index weight. That's the highest in over 45 years of data. And that's caused a lot of agitation for investors. But keep in mind the equal weight S&P 500, where everything is on a level playing field, whether it's tech or utilities or financials and whatnot, is just on the cusp of breaking out to its first new all-time high in 2 years. Right, so it's been about 540 or so trading days. It's the third longest streak in history without a new all-time high. And this is reflective of broadening participation. The average stock is breaking out to new highs. And historically, when you go this long without hitting a new high, whether it's a year or 2 years, the forward returns are often pretty decent. It's this idea of taking a step back in perspective that a lot of corners of the equity market have just gone through a really challenging 2 to 3 years. So take a step back. Yes, we've run up pretty aggressively here in the near term, but the equal weight S&P is reflective of that stronger participation, and it's not all that stretched when you zoom out on your time frame. So that is very much supportive for longer term investors out there.
Yeah, absolutely. And broadening globally as well, a lot of international markets making all-time highs. But, thinking about the concentration at the top and the tech sector, I do get a sense, at least at this moment, that there's a little bit of euphoria. I don't know exactly where sentiment stands on things, but at least within the tech realm, you all tend to use sector flows in and out of sector ETFs to kind of get a gauge on sentiment. How does that look right now?
Yeah, so ETFs hold this great, valuable information through flows and volumes and products that are out there to tell us how investor and trading sentiment is in the near term. And from the flows basis at the sector level, it's basically tech versus everyone else. Whether you have broad-based tech, semiconductors, flows are going really to aggressive territory, whereas the other 10 sectors combined have actually seen negative outflows, have seen outflows over the last year. So it's very much a tech versus everyone. I do think it's a little bit aggressive in the near term, especially if some tech stocks trading at very stretched levels relative to their trends. So I would look for perhaps a speed bump in the coming months for some of these tech names. That's okay. That's how markets work as the rest of the broader market continues to improve. Another way I would look at this is you take a look at, say, leveraged semiconductor volume. Those have started to spike too, reflecting those more aggressive attitudes. So sentiment is a little bit hot for certain corners of the market. I'm just aware of that given their influence in the benchmarks. But when you look elsewhere, it's not as aggressive for other sectors such as, say, energy, healthcare, even industrials to an extent. So that's very much a big difference today versus a few years ago when the market topped out, when it seemed like it was all in on every sector as opposed to just one or two.
Yeah, I think that's good perspective. And yeah, anytime you're talking about a leveraged product getting flows, you have to, you got to take a second look there. Um, Final question. You've done a bit of writing on this before, and I'm curious on your take on China as an investment. We mentioned the breadth in the US, the breadth globally, and China has really been a laggard over the last couple of years. I'm curious, your interpretation of the performance and how you think about China as an investment overall.
Yeah, so amazingly, if you go back over the last 30 years, Chinese equities have returned basically 0% total return for investors. And that's significant because of the region's influence in certain benchmarks, such as emerging markets. And so, I would look at China much more as a trading vehicle than a longer-term investment. The statistics are there to prove that. When you are adding China to a portfolio, you are adding an immense amount of volatility. That's the toll for China exposure. And so sentiment is very much dour on the region, right? We've seen all sorts of headlines about the central bank taking action. A lot of China products are closing now. So sentiment can't get much worse, and maybe there'll be some sort of a tactical rally here. But again, timing the entry and exit of that, this is much more of a trading vehicle, is very difficult, whereas the longer-term investment case, I think, remains very challenged for the region. I would look at other areas around the world. India acts great, perhaps a little bit more growth and tech-oriented. You look at Korea, still strong, and even some pockets in LATAM. So there is opportunity internationally for the emerging markets scenario, the emerging markets case in a portfolio. But just keep in mind, you may want to avoid ones that rely too heavily on the China region going forward.
Yeah, it's kind of a know what you own because it has been such a big weight in these kind of passive EM benchmarks. So something to keep an eye on, something to take away from this this video. Todd, I want to thank you so much for the time. It's been really insightful, and can't wait to talk again soon.
Thanks, Ross. It was a pleasure.